Ruthie from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I show you how investors and traders may make money on our stock market and also on the global market as well. I'll show you what is hot and what is not, what you should hold and what you should fold. And if you enjoy the presentation, please give us some feedback and we will appreciate it. Let me start with what happened around the world. We start with the Dow Jones Industrial Average. Over last week it was down 0.9%. However, when we look at the big picture, that is over the last 2 weeks, we see that the market was down 361 points or 1.3%. The Nasdaq, even though it was up last week, over the last 2 weeks it was down 1.7%. And the S&P 500, that is the broader index in the United States, was down 1.3% over the last 2 weeks. When you look at the US dollar, over the last 2 weeks it was up 0.4%, and our Australian dollar was unchanged over the last 2 weeks, even though it had a slight rise last week. Now when you look at commodities, gold was down $14 over the last 2 weeks, despite the gain of last week of $7 or 0.5%. So over the last 2 weeks we have a major drop of nearly 1% or $14. Silver was down greater percentage over the last 2 weeks, 2.5%. Crude oil, that is the West Texas crude oil, was down 9% over the last 2 weeks. Half of it, or most of it, was actually last week. So 2 weeks of declines on the West Texas crude oil. Guys, if you are interested to find out more about the various other commodities such as wheat, soybeans, coffee and so on, all you have to do is talk to us and we'll give you some directions that may or may not happen with our forecast and using the mechanical system. Well, at the closing bell over the last 2 weeks, what we see here, our market was down, that is the ASX 200 was down 3.17%. Most of it was actually down last week, nearly 3% last week and a bit more the week before. In combination, we're seeing that the momentum was greater last week. Our gauge, that's the ASX 200, is made up to a greater extent by two major sectors, that is the financial and the materials. When both of these sectors are up or down, usually the market is actually corresponding accordingly. Well, what happened? The financials over the last 2 weeks was down 4.4% and the materials was down nearly 4.7%, and that affected the whole market, down 3.2% over the last 2 weeks. You're looking at all the other sectors. The best sector was healthcare. Over the last 2 weeks was slightly up by 0.2%, and real estate was actually also up by 0.3%. Worst sector across all sectors was telecommunication. Telstra was down quite a bit, 5.3%, and followed by energy, that's the oil, and the financial, and we've got also the resources. So it was actually a bad week overall, with the exception of gold and healthcare, the last two sectors which were actually prominently higher last week. Now looking at all the large stocks which we trade options most of the time, you can see that Newcrest Mines was up 1.1%. Suncorp was the best performer last week, 2.9%, let's call that 3%. And over the last 2 weeks we also see that Suncorp had a major rise overall. Now looking across that column over the last 2 weeks, Bramble, the worst stock, down 16%. Looking all the way down, 8%. AMP was down 8% over the last 2 weeks, most of it last week. BHP down 6.5%, most of it last week. NAB 6.5 most of it last week, all of it last week, and so on. If you want a copy of this slide, all you have to do is call us. So what does it mean by looking at those stocks over the last 2 weeks? We start to get some more understanding of the momentum that is moving across the sectors and from the sectors to the stock. Now, looking at also at volume is extremely important. It's a very important leading indicator. Even though the market last Friday, that's daily, the advances were greater than declines, but look at the volume. It was the lowest volume in nearly 15 days. So even though there was a rise in the market, I think the market was very hesitant in trading. So we can see here the volume is dropping over the last 15 days. People are concerned. Looking at the weekly advances over declines, after we've seen 5 weeks of where the advances were greater than the declines, we started to see that actually the market, the advances has actually dropped quite a bit. You can see here from more than 50% down to 49% last week. So that's really not a very good indication to what may happen in the next few weeks. Okay, we have designed a mechanical system. That's a system that we have designed over 10 years, actually over more than 20 years actually. It's based on technical analysis that includes 8 technical indicators. Through them we are able to create a strategy for the investor as well as for the traders. And even if you're a trader, there is also a distinction between an aggressive trader and a conservative trader. So you can see here we have the investor and the conservative trader. Most of our clients happen to be conservative traders, and then we've got the aggressive and the very aggressive traders. So look at the American market. We've gone from very bullish 4 or 5 weeks ago to slightly bearish, and of course now we see greater extent of the bearish trend on the US market. But if you're a long-term investor, you want to wait and see what is likely to happen. For the very aggressive trader who is in and out of the market every day, every week and so on, you've got very bearish indication. Gold, bearish, gone from slightly bearish, slightly bullish, neutral, bearish and strongly bearish. Silver has continued to be bearish over the last 3 weeks. Crude oil is very bearish over the last week, which may indicate that there could be a continuation of the bearish trend on the crude oil. Now soybeans, I guess you can see that China started to buy soy in anticipation of the discussion they're going to have with the US. Of course they want to have a trade deal, well, not only in the American terms but also on the Chinese terms. So we'll wait and see what happens between America and the US as far as the trade talk. The Australian dollar, very bearish, so you don't want to go bullish on the Australian dollar. In terms of the British pound, we've gone from bullish to bearish, and euro, you can actually, if you haven't traded bearish euro the last 4 weeks, maybe you missed the boat. Okay, looking at the chart for the Dow, you can see here last week it's a down week. However, it was a lot lower, and the last 3 days or the last 2 days we've recovered quite a major of the losses, but still we are down on the week. Remember, we had a gap here, and usually technical analysts always say that gaps are to be filled. Now that that gap is filled, we expect the market, even though it may go higher tonight and our market may go up today, we have a good futures indication of 55 points higher. We may see that over the full week we might see that the Dow may decline. However, the Chinese and the US trade talk may give us some indication about where the market may end up. Positive trade talk will indicate positive stock markets. Look at our mechanical system for our sectors. Last week all sectors were bearish. The material was more bearish and the telecommunication was very bearish, but most sectors for all type of traders, investors were actually bearish. Okay, so that is our market. You can see here the last 2 days we've had a major drop, small recovery on Friday, slight recovery today, but overall we may see that we're still on a bearish trend market, so be aware. Now in terms of our stocks, we've gone from slightly or a major bullish a few weeks ago. You can see here for instance CIMIC, that's the old Leighton Holdings, bearish, slightly bullish, neutral, very bearish, and very bearish 2 weeks in a row. Well, again, if you look at the worst sector is the worst stock, CIMIC. Suncorp has been very positive last week. As you can see here, bullish across all type of traders. But remember, we are on a bearish trend, and unless we see major 2 days continuation of bullish movement, we would say that it is likely, with the exception of what happened in the US, between China and the US, we are still bearish on a bearish trend. Okay, in terms of volume, we have a system where we actually pick up volume. We can see here that ANZ had slightly more than the average volume. This is the average volume, 27.5 million transaction per week. Well, here last week we've seen slightly higher. We're going to ignore that. In terms of the bearish top 50, a company called Dexus Units, we had 145% increase in the volume, from 16 million transaction per week to 23 million. We want to know why, so we go and study that particular stock. Woodside was also down by 111% of the volume increase. For the aggressive traders, if you want to actually look at those mid caps, you can see here the price is $2. We don't like to trade anything below 10 cents. $2.40. We've had major increase in the volume. So do you want to go and look at Flexi Group and see why the volume has increased? Baby Bunting, BWX, Nick Scali, all those companies have had major increase in the volume last week. Again, we want to know why. The price went up, the volume went up. There is a good reason for that. Now, in here we've got stocks going down in price and the volume was high. Holdings had 188% extra volume last week. Hotel property, high volume. Rural funds, high volume. Virtuous Health, high volume. Again, all of these companies need to be investigated based on a drop in the price and a major increase in the volume. Now finally, I want to show you where we ended up. We had at one stage our market was actually high by 5,800. That is actually our involvement in the market. $4,000 turning into 5,800. That is approximately 66.3%. Remember, a week before we were down to 5,370, and let me tell you also that today, this morning, we found that our CFD account is very close to 6,500. We went up by an extra 1,000 last week. Finally, this is our disclaimer. Remember, we don't know your financial circumstances, so we don't know what risk appetite you have, and obviously before you take any action, please consult with us or talk to your professional advisor. There is no guarantee that everything we say is going to turn profitable. However, we use our technical analysis and fundamental analysis, and we try to determine what is possible that will happen. So please be cautious when you take any action. Finally, if you want to talk to us, this is our contact details: george@fssecurities.com.au. Remember, there are two S's. FS stands for full service, securities.com.au. If you're calling me on my mobile, I'm available at least 12 hours a day, 7 days a week. You can put 61 if you're ringing from overseas, and then you don't need the zero. 61 411 259526. That's 61 411 259526. Have a good week and happy trading.